Hey everyone, it's Ishan here from Royal LePage Signature, and this is your market minute for January 2024. In this video, we're going to take a look at the sales, the demand, listings, inventory, months of inventory, and price across the GTA, Toronto, and York region. And if you've been paying attention to the news, the numbers for sales look really great. They're saying that the market has roared back to life. Take that with a grain of salt. We had about a 37% increase year over year in the number of sales. 3,100 sales last year, up to 4,200 sales this year. In Toronto, we saw a 32.85% increase in sales from 1,108 to 1,472. And in York region, we went from 544 sales last year to about 775. Which represents a 43% increase year over year. And what this tells us is that buyer confidence is returning to the market. When we see increases of this magnitude, we know that people are out and people are shopping and people are buying, which is great because we had a unseasonably cold 2023. It was the lowest total sales we've had in the last 30 years. So it's good to see that buyers are back and making purchases. With respect to our listings or our inventory, it did start to come up a little bit, but not at the same pace as the demand. So in January 2024, across the GTA, we had about 9% more listings than we had at the same time last year. We had just over 10,000 units available for sale. That was in the GTA. In Toronto, we had 4,500 units available for sale, which was about a 17% increase year over year. And in York region, we had another about 11% year over year increase in the amount of inventory. So we know that sales are going up, listings are going up, but not at the same pace, which usually means that the market tightens just a little bit. And you can see that in the months of inventory. So as a reminder, the months of inventory is how much product we have on the shelf. 4 months represents a balanced market. 3 or less than that is a buyer's market, or seller's market rather, and above 4 is a buyer's market. And in the GTA, we went from 3 months of inventory last year at the same time to 2.39. In Toronto, we went from 3.5 to 308. And in York region, we went from 2.94 months of inventory to 2.29. So across the board, we can see that inventory levels are shrinking. And when this happens, prices do usually go up. But hang on a second. When we look at the prices, we see that prices are down or flat, more or less, across the GTA. So in January 2024, we had a dip of about 1%. In Toronto, we saw a dip of 2.83% year over year. And in York region, our dip was about 6% year over year. And so why does that happen? What does that mean? Well, 2 things. One, these are averages and they can be pulled down. It's a weighted average. So if smaller properties are selling and more of them are selling, they can pull the averages and the average sale price down. And also, secondly, the thing to look at, or what's important for us, is the fact that the sales are up and the months of inventory is shrinking. Sales are a leading indicator. So prices will follow. Once sales start to go up, prices lag a little bit. They will eventually start to pick up if the sales continues the way it does. So if you're watching this video and you're looking for like that quick summary, buyers are back. Inventory is still slim. And prices, although they are flat now, look for them to start trending upward. I don't think we're going to see a rocket ship. I hope we don't see that. But slow and steady, I think our market will go through 2024. Thank you so much for watching and have a great day.